Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that yesterday's failed breakdown at the 40.5 to 42.5 support eventually ended up taking ES up to the 58.75 to 60.75 resistance area, where responsive sellers were active on first test. But now that high probability move is done and heading into the open, the market is again in a very balanced state. And we don't really have any major economic catalyst scheduled on the calendar today, but we do have the employment report, the non-farm payroll, due tomorrow morning. So the expectation for today is for the market to continue to be fairly balanced. Off the open, keep an eye on 51 to 52. Holding above it signals that the buy side is in control, and from there we can go up and retest 59 to 61, 63, 64, and in the event of a breakout above 63, 64 on strong momentum, perhaps we can go higher and test the 68 quarter, 69 quarter, and then the final spot would be 74 quarter to 76 quarter, where we would expect responsive sellers to step right back in and cap the upside at that point. On the downside, we have support 45.75 to 47.75, essentially the overnight low, the previous close. And if you look back over the earlier part of the week, you can see that 45.75 and 48 were the lows established over here. And holding above that area just tells you that we are still trading within the recent 3-day balance that we broke down from yesterday, which ended up being a failed breakdown. So it would just tell you that the market is still in a very balanced state. We're not really liquidating or shifting the control to the sell side. And then below 45.75, we still have larger time frame support at 40 to 42. That zone held up really well yesterday, and even now, in the event that the market goes down there, responsive buyers can defend that area, and the zone can still technically hold, and the market can continue to balance. So heading into the open, we know that the buyers are more dominant at this point, but the market is in a fairly balanced state, and because the next economic catalyst is due tomorrow, we could continue to actually balance within a range, which means that if we're going to initiate any longs in the middle of the range here, let's say off of 51.52 or even 45.75 to 47.75, then we do need to see something in real time. These are not automatic fade areas. So when the market is just establishing a range or balancing in a range, you need to be more cautious, and it requires more discretion and reading the market in real time. Whereas, the 40.5 to 42.5 zone yesterday was just very good trade location, and a trade could be taken there without really looking for anything in real time. But in this case, because the market is back in a very two-sided balanced state, we do need to actually see upside momentum in order for the market to break out above 59.61 and 63.64. Otherwise, it may just end up, balancing within a range. On the downside, 45.75 to 47.75 is, decent support, but it's not a automatic fade. If the market ends up retesting that area and filling the gap, then we will have to see and make sure that we're not seeing any lopsided tick showing sustained downside momentum or extreme broad market weakness, which could take ES right back down to 40.42. So now it requires a little bit more, just reading the market in real time, assessing the situation in real time, and then making the decision of whether it's worthwhile to fade a zone or not. On the upside, 59.61 and 63.64 continue to be valid areas of resistance until they're taken out. And even though, technically we could get a breakout above those areas, we will have to see sustained upside momentum and broad market strength in order for that to happen. Otherwise, ES can continue to balance below 63.64 and above 40.42 and just continue to be in a very balanced state heading into tomorrow's employment report, and then that can be the catalyst for a directional move one way or the other. So, we're in a very balanced state, very two-sided market, and we just need to be more selective and cautious on the trade setups that are taken. Now, the edges, 40, 42, 63, 64, those are areas that can provide short-term edge simply based on good trade location. But in the middle is going to require a real-time read to really determine whether it's worthwhile to initiate a trade or not. It's going to depend on how the market is really setting up for the day, what type of broad market strength or weakness we're seeing, how the momentum situation is developing. Now all those things are going to have to be taken into account. So, off the open, if we are holding 51.52, then that's a positive sign for the buyers, and it can result in a retest of 59.61, potentially 63.64. And if we're failing at that zone, then we're probably going to go down and fill the gap and potentially test 40.42 again. In the event that 40 to 42 and yesterday's low of 39 is taken out, responsive buyers can still be active at the 31.5 to 34.5, 29 quarter, and especially 25 to 27, which would be an automatic long in most scenarios, since it's also a range extreme. So those are really the main thoughts heading into the open. Let's see if the buyers can really maintain the control that we've seen in the overnight session, and we'll take it from there.